let's get some street reaction to these Merck numbers from somebody who covers the healthcare sector, Jon Sullivan. Jon is with the investment firm Leerink Swann. Jon, thanks for your time. Sheila just gave us the numbers on Merck, and this seems like it speaks to a story that the big pharma names have been struggling with. On the one hand, here's a company that did a huge acquisition to make sure the pipeline looks pretty good. They're cutting costs, that helps earnings, but the revenue story is always a challenging one when you're so big.
The large pharmaceutical industry truly is a cost-cutting story. This is why the big deals that we saw last year were done, and now the biggest lever that companies like Merck have to have available to them in order to improve earnings is cost-cutting, and we saw that again in the second quarter.
Sheila mentioned the sharing plow deal, which again is a deal for the future. This coming in a week when we're talking about other possible deals happening in the space. Do you think other names, I mean, for example, we're still waiting for Pfizer to report its second quarter results, but do you think this is going to be a continuing theme in the sector, that the drug makers are going to say, you know, after we've cut costs, we have to look at the possibility that some of the drugs that are losing patent protection are going to need to be replaced with somebody else's drugs?
Sure. I think broadly speaking, the drug industry knows that what it has is plenty of financial flexibility, plenty of cash. What they don't have are plenty of products. So they're going to have to continue to move to add products either by development or acquisition.
Now, the other big thing that the healthcare sector has to factor in is healthcare reform, something we spent an endless amount of time discussing earlier this year. I know you've spent a lot of time yourself trying to crunch the numbers on how it affects each company and the industry overall. Merck itself has talked about the reality that this hurts their story for 2010 and beyond. What are the numbers that you've come up with for just how big a cost reform is to these big pharma players?
It's interesting. When we started talking about healthcare reform and when the drug industry went to Washington and made their deal with the White House, there was a general expectation that the cost of the drug industry was something on the order of $80 billion over 10 years. Now it looks more like $100 billion, with the biggest difference being much broader availability of low-price drugs to a wide range of hospitals that didn't have that availability before.
That's an increase, but of course these drug makers make a ton of dough, so $20 billion for the whole industry, who knows? But the reality is that investors have looked at the healthcare sector over the last 12 months and they've said, we don't want to own this the same way we want to own some other sectors. It's the worst performing group for the S&P. Even this year, after we got past what it seemed like the reform details, it seems like investors have still been cautious on the group. What's your view on the sector right now?
Investors didn't come back to the group the way that many of us on Wall Street expected in the wake of healthcare reform being settled in March of this year. We think that investors are still nervous about how healthcare reform will how the broad legislation will turn into individual rules and how those rules are going to affect individual companies. We expect that as we get closer to 2014 and a whole lot of new customers for the healthcare industry, healthcare stocks can really respond.
All right, Jon, appreciate your perspective on the group. Jon Sullivan of Leerink Swann joining us with some reaction to those Merck numbers.